All right, welcome everyone. It is 7 p.m. Eastern. Welcome back to the Sunday night live stream. I apologize for not being able to make it last week. And funny enough, I would have been able to do it. Was supposed to have a 6 p.m. flight to New York City last Sunday night. Flight got delayed, and then we actually boarded the plane at like midnight. And then the pilots hit their max time, their max shift time or whatever. And at that point, they couldn't get any more pilots. So it was supposed to be a 6 o'clock flight, waited around 6 hours, boarded the plane, and then it got canceled. So I should have just done it from the airport. But for basically 6 hours, they're like, hey, we'll be boarding soon. We'll be boarding because the plane was there. We didn't have a crew and then didn't have pilots. And then the pilots got there at like 8 o'clock, but we didn't have the attendance. So anyway, not that anyone cares, but ultimately boarded my flight 24 hours after leaving for the airport. Always fun, but made it to New York City. Had a bunch of media appearances. So it was a good week. No snow was the only bummer, but the wife, the lovely Mrs. Bohen, went along. You know, we checked out Rockefeller Center, of course, and went to Macy's, and still beautiful in New York City even though there's no snow, still beautiful around Christmas time. So anyway, sorry about missing last week. We're back. Let me get to the agenda. When it comes to the S&P, NASDAQ, and Dow Jones, kind of a choppy week, really. We kind of, had a little bit of a run up there on Thursday and then sold off. Market was weighed down heavily by Oracle. Oracle is one of those huge stocks that, pulled back post earnings and really just kind of put a lot of pressure on the overall markets. Now, what's great, and I know I say this every week. I mean, when markets pull back or when markets start to grind sideways, people are always like, what do you do? What do you do? And many of you have heard me say this many times. I think the ultimate hedge, like I know a lot of you guys have long-term holdings, or maybe you're looking at your retirement account, and you're getting worried. Like, to me, the number one hedge for when markets, the real stocks, the S&P, the NASDAQ, the big names start to go sideways or not really move, is day trading, man. Like, every day there's amazing opportunities if you know what to look for. Now, what to look for, last weekend I did the weekend workshop, had a great turnout. Was a great turnout last weekend, and really spent a full 2 days talking about the recipe of what presents, daily trading opportunities. Now, that doesn't mean they're always winners, obviously, but there's a very distinct recipe when it comes to identifying the most explosive stocks: catalysts, float, volume, history of past runs, key technical levels. There's a very specific recipe that if you use that recipe day in and day out, you'll be able to go from thousands of stocks that don't really move much down to less than 5 that have extreme volatility, and volatility creates opportunity. Now, again, I'll say it for the second time, doesn't mean every, extremely high volume, low float stock with a catalyst and a history of running's a guaranteed winner. But all we can do as day traders is put ourselves, like I think of, the Wayne Gretzky quote, you skate to where the puck is going. Doesn't mean you score a goal, but if you can follow this recipe, you can be there. Each day, you're going to have less than 5 stocks to really even watch. I mean, most days it's less than 5. Then if you use technical levels and in chart patterns, whether that be an RCT, a weak open red to green, a dip and rip, or technical plays, around channel trades. You know, there's all these different patterns that we trade. So what's great, you use that process, you go from thousands of stocks down to a handful, and then you simply trade the ones that follow the patterns. And then that reduces it even less. Most days there's 2 to 3 of those. So anyway, that was one reason I wanted to do the Sunday night live stream last week, was because I wanted to kind of, thank everyone. I think we had about 500 people there. Great group, and was just really, really enjoyed it. So that being said, thank you for all of you guys that were there. So we went over kind of the market trends. We're kind of lacking earnings plays this week. We're kind of coming out of it. Just looking at the earnings calendar, we've got some stuff at the end of the week. FedEx, Nike, and that's about it. We're going into Christmas week, so not a lot. Lots of times I like to kind of tip you guys off to the upcoming earnings plays, but just not a lot out there this week. Once we get into the first of the year, then we'll be back in full earnings overload. But just looking at the calendar, nothing particularly interesting coming up this week, except for maybe FedEx, Nike, FCell. Oh, FCell's on there. Been a mover in the past. FCell's been grinding along too. Not the worst chart in the world. So from a low price land, I definitely keep an eye on FCell. Watch for the reaction on earnings. That is Thursday morning before the bell. So outside of Nike, FedEx, and FCell, that's about it. Let me see if I got any questions here. Yeah, it was cold, man. Tonight wasn't as bad. I went hunting last night, and oh my gosh, that walk in was brutal. Man. I mean, it was like single digit temps, wind blowing like crazy. Anyway, it's a little better tonight. So, but yeah, it looks like it's pretty much cold everywhere. Everybody's kind of reporting. So, silver crash coming? I don't think so. Listen, I know I don't talk about the metals that much, but listen, money printer go burr. Okay. It's like, look at, and we've talked about this, not really recently, but, looks like we're going to go right back to printing money. Not that we ever really stopped. So as the dollar continues to crater, silver and gold, for me, I don't really actively trade them. I know a lot of people do. The nice thing is there's options. There's ETFs. Okay. There's ETFs and there's options on those ETFs. Last week, we had Ben Sturgill join me on one of the webinars, gave out an options play on SLV, the silver ETF. I don't remember exactly what it did, but I think it was like, I believe it was like 100% or more options trade in a few days. So my answer, obviously, James Ladarkis, I don't have a crystal ball, but I don't see anything out there that would indicate any sort of crash coming in gold or silver. It's just, remember, they move as a flight to safety. So as, the dollar continues to devalue because of money printing, money flows into gold and silver, etc., as basically a safety play. Oh, a lot of you guys asking about weed stocks. Yeah, let me share my screen here. And let me do this. Share screen. Really, the biggest theme on Friday was weed stocks. Now, I mean, there were some decent runners. It was the theme. I mean, really, the best plays of the day were weed stocks. I certainly wasn't blown away by any of them. I mean, they were the best movers. YCBD, CGC, TLRY. Now, if you want, feel free to screenshot this. This is basic. Now, I'm not saying this is all inclusive, but it's close. This is probably 90% of the marijuana plays out there. So if you're looking for the tickers, I see Jonathan, dropped a bunch of them. So keep an eye on them. I'm concerned that it will be a sell the news tomorrow. But as always, we don't anticipate, we react. So take the watch list, screenshot it if you want. And again, I think, Jonathan posted a bunch of them. I think all of those should be on this list. But, just trade the patterns at the end of the day. And what I do, like people say, how do you use a watch list this big? If you look, only about the first 10 or 15 really trade any volume. Okay. Like you got a lot of these down at the bottom, any of those names that are trading, under 1 million shares a day, I would just say ignore, not enough buyer's interest. And then you got a bunch of OTCs in here as well. I very seldom trade OTCs. I just don't like all the hassles associated with them. They're very illiquid in pre. They don't trade in after hours. A lot of you guys, now this doesn't apply to me, but a lot of you with a lot of the free brokers, a lot of them have very limited access to the OTCs. So, and to me, when we've got all these liquid plays, like a TLRY, that's a listed stock, YCBD, a con, you got an ETF, MSOS. Actually, MSOS and MSOX were decent on Friday. What's nice about the ETFs is you don't have exposure to just one sketchy weed stock. Because remember, all of these are very, very sketchy. Never get involved. Never get involved in a land war in Asia, and never trust a weed stock. Two totally true things. Hopefully all of you guys get the Princess Bride reference. But that being said, what's nice about like MSOS and MSOX, which MSOX is leveraged, they're a basket of weed stocks. So if you're trading one specific weed stock and they do something sketchy, well, it can get ugly fast. What's nice about the ETFs, you've got a little bit of diversified risk. So if one of them does something sketchy, it's not going to crater the ETF. So definitely kind of consider that if you're as wary of weed stocks as I am. So again, feel free to screenshot this list. All of you guys in DIT, actually, I'll drop it in the chat right now. I posted this on Thursday. Thursday is when weed stocks kind of first started warming up. I posted on Thursday, posted on Friday. But any of you in DIT, I did just drop it in the Discord, so you've got access to it. Looking forward to the SpaceX IPO. It's going to be a while. I know there's a lot of hype around the SpaceX IPO. Now, watch the space plays. I've got a watch list of space-related stocks. They warmed up a little bit this week. But, I'm excited about the SpaceX IPO as well. But it's going to be a while. It's going to be a long time. It isn't going to happen, like, right away. So, this guy is such a yapper. Thank you, AJ. I appreciate the kind words. How is this talking about this going to help your next trade? Man, AJ, you're just a ray of sunshine, aren't you? Man, nice to see you, AJ. You're just bringing just a light into the world. I mean, and this is what's funny is, you know, the market's closed, okay? The point of the Sunday night live stream, answer some questions, talk about the week before, get ready for the next day. But, you know, you got these people that are like, give me a pick, give me a pick, give me a pick. But, you know, whatever. Market's closed. We're just here to hang out. And, you know, AJ, you know, I would recommend, you know, bringing all of that positive attitude, that ray of sunshine into everyone you meet. You know, he's probably like one of those guys. It always reminds me of, you know, if you run into one person and they're a jerk, well, they're probably an asshole. But if you go your entire day and just everyone you meet is an asshole, well, probably you're the asshole. So anyway, that being said, OKLO buying the dip. Let me look at the chart. I'm a long-term holder of OKLO. Let me look at the technicals. Man, you got a nice bounce level right there. So what I would look for on OKLO is right here. So what I want you to focus on is that bright, notice that orange line, okay? So what that, now I know there's some red lines in there as well, okay? That orange line is the prior resistance level. Now, actually, can you guys see the orange line? Type orange, like, now I know the red is kind of basically at 85.60. Does everybody see the difference? I mean, I know if you're on your phone. So notice how that orange line back a couple months ago was resistance. So it was technical resistance. Stock butted up against, I'm going to call it 85. I'm going to round to 85. So notice how it couldn't break 85, couldn't break 85, couldn't break 85. Then when it finally did break 85, took off, okay? So that was previous resistance. Now, notice that exact same price level has become support. So if we go back after the sell-off, after OKLO took off, notice where it bounced, okay? Bounced right at that 85 level. Now I'm rounding, okay? It's like 85.60, but for the sake of discussion, I'm just going to round to 85. So what you have here on OKLO is a great example of previous resistance now becoming support, okay? Now, how many of you guys study technical analysis? Like, I don't know. What should I have you type? Like, just type technical. Like, hopefully all of you guys are faithful studiers of technical analysis. I'm looking for my favorite book. I don't think it's behind, or is it? Why? Maybe it's over here. Where is it? Whoops. I think it's back here. I just think I'm looking right at it. Anyway, I don't know. I don't know. Technical Analysis Using Multiple Time Frames by Brian Shannon. So, guys, if you're new to technicals or you don't know anything about them, please buy that book. And actually, I'll get the link. And then we'll come back to OKLO. I'll finish my point on OKLO. So, technical. Now, people always say it's expensive. Listen, guys, I think this book, tonight's book mention, whoops, get link. Oh, hold on. Control C. Now, I know it's a $76 book, but I have said this so many times. If I would pay like literally thousands of dollars for this book, no one ever believes me when I say that. They're like, no, you wouldn't. But when I think back to kind of when I was really getting into technical analysis, I was really struggling. I was struggling to see the levels, to identify support and resistance, etc. And as soon as I read that book, it was like the skies opened up. I was like, okay, I finally get it. So the reason I mentioned that book, and I know it's $76, but I think it's a steal. Just buy it, read it. I refer to it. I go back to it. Like I use it all the time. So going back to OKLO, this is a key perspective that you would learn from that book. Notice again, back here, where 85 was resistance. Then look at what happened when OKLO broke 85. I mean, it went to 190. Okay. So now OKLO has pulled back, and it is pulled back right to the previous resistance level, which as of right now is support. So let me bring that up one more time. Where did I close? Did I close it? So in summary, my point would be I like OKLO as long as it doesn't break support. So what's great about this is, by using, like, the one thing with technicals is it allows you to build a trade plan. Like, now I'm very, very bullish OKLO. I've had this stock since it was like $10 a share. A lot of you guys know this is one of my long-term recommendations going back a couple of years ago when it was like $10 a share. And I'm a long-term holder of this. This isn't a thing I day trade. Now, the point is, as long as this stays above 85, love it as a buy. And if it breaks support, you stop out, you move on. Okay. And that's why I stress using technicals so much, because so many people buy a stock and then they're like, what do I do now? What do I do now? By using technicals, you can answer that question. Now, if you know the way I trade and the way I teach is we never enter a trade until we have determined all three of those things. Now, everybody doesn't listen, okay? But the way I trade and the way I teach is we still use the fundamentals and the story of the stock to kind of determine the opportunity. But then the trade plan is written by the technicals. And that's because once you buy the stock, and this is something, again, you'll hear me say a lot. Once you buy the stock, you own it, right? Like what so many people do is they buy it and then they do their research. Like they see something moving, they see a mention in a chat room, or they see it on Twitter, or they see it on a live stream, or they see it mentioned in the media. They buy the stock and then they start doing due diligence. And that, in my opinion, is a big reason why so many people fail at trading, because they do it literally the exact opposite way of the way a professional does it. What a professional does is front loads all that due diligence, then only buys the stock if their due diligence says, this is a stock. And then the technicals allow you, once you have built that bullish, or this applies to short selling as well, if you built a bearish case, the technicals now guide you through the actual implementation of that trade. Does that make sense? Now, hopefully, all of you guys do that way. Okay. Hopefully, all of you do it that way. If you don't, hopefully, after tonight, you start doing it that way. Okay. But the point is, as of right now I can't predict the future, but as of right now, previous resistance has become support. So I like OKLO at any point as a buy, as long as it maintains 85 support. Okay. YCBD still in play for Monday. Again, we already kind of talked about the weed stocks. My perspective is the same. We got to kind of see. Now, I did give you the watch list, so you guys all have the watch list. And then at the end of the day, just trade the one that follow the pattern, and all patterns apply, weak open ready greens, dip and rips, support resistance plays, oracle signals, all of them, all in play. So, but focus on the most liquid, and the ones that actually follow the pattern. Now, we already kind of went over this, so I'm kind of doubling back, but some of you asking about the dip and rip pattern. Like, one thing I would suggest, guys, is a lot of these patterns and terms that I use, like, you're on YouTube right now. If you Google, I think if you Google dip and rip, like, I'm at the top. Yeah. Like, literally, if you Google dip and rip, it's all me. Because, like, this is a pattern that I've traded for 20 years. I've talked about. Now, you're also on YouTube. If you go to the archive, I've probably got 20 videos on YouTube. So I would just say check that out. Like take advantage of the YouTube. I mean, we're on YouTube right now. When this stream ends, just jump over to this. You're already on the StocksToTrade channel. There's tons and tons of videos. And actually, I just did one that I really like. Actually, yeah. I did one with beauty. So this one is the one I did on the whiteboard. So I'm very proud of this one. Excuse me. And a lot of people really like this one because I did the overhead whiteboard. So let me put that in the comments here. Recent DNR breakdown on the whiteboard. So this one I'm really happy with. It got a crazy amount of views too. 20,000 views. Our channel, I think our videos average 3,000 to 5,000 views. This one got 21,000 views. So evidently, the reason I want you to check this out is it's one of our best performing videos in months. So obviously people like it. It's got a boatload. It's got 982 thumbs up. So for the sake of time, I'd say just hit that link, check it out. So I don't really use, Seeking Alpha, aka Sucking Alpha. So the Seeking Alpha used to be pretty good. And then I think they sold to Yahoo, didn't they? Seeking Alpha sold to Yahoo, I think. Yeah. Or no, they parted ways. I don't know. Seeking Alpha, the short answer is it used to be pretty good. I really don't use it at all anymore. It's just, I mean, and keep in mind, if you use it and you like it, fire away. But I can't really remember the last time I went to Seeking Alpha. It used to be great. Like 10 plus years ago was awesome. But if you like it, use it. But I can't remember the last time I really went there. So AEO. Someone keeps asking about AEO. Oh, people didn't want to believe. People didn't want to believe when I talked about the outrage play, American Eagle. Where is it? No one wanted to believe. Yeah, right here. So AEO was at 18 bucks. So when the Sydney Sweeney news broke, I was like, this is setting up to be an epic retail play as well as short squeeze. Like a lot of people. This is what I call like an outrage play. And again, let me link this. I'll just link this. But I've been long AEO from the 18s, and I don't plan on selling until 30 plus. Like I think that AEO could be a 100% winner. We got a couple weeks left of the retail season, and just keeps trucking along. So anyway, let me link this. But yeah, when I went on the big three in the 18s and it's at 25, I think this thing has 30 plus written all over it. So Benzinga Pro again. So guys, for my news feed, I use StocksToTrade breaking news. Now, obviously, I'm biased, okay? But I know the guys at Benzinga. I know a lot of people like it. What I would say is check it out. Try it out. But Ray Borden, like I said, I know the guys at Benzinga. I've appeared there before. I just use StocksToTrade breaking news for all my news. I'm lazy. Like it's built into the platform. I know the guys. It's really all I use for breaking news. So some of you wanting a link to the watch list. Let me grab it here. Let me go to my Gmail. Whoops. And my watch list for Monday is right there. And right there. So watch list is posted. And what I would highly recommend, I mention this pretty much every week, is just sign up for it. Okay. Click the link. The watch list is all free. Okay. I did post. So if you see the WL with the date, that's this week's watch list. And, people ask pretty much every Sunday night. What I would do is just hit the join now button. It's free, comes out every Sunday. Then you won't have to ask for it. So. Okay, let me go back to my agenda. Looks like I'm caught up on questions. So, where is it? There we go. Yeah, so TLRY, it's kind of what I like about TLRY is it's probably the most real of the weed stocks out there. Outside, again, we just doubling back, MSOS and MSOX, the ETFs, just revisiting what I said earlier. What I like about those is you have your risk spread across multiple weed stocks. Now, a lot of people are excited for this week. If I had to pick one for a multi-day hold, which is the watch list, the weekend watch list obviously comes out on the weekend. So it's kind of forward looking. Like the thing with day trading is every day it's different names. Now the patterns repeat, the setups and the patterns repeat, but every day we get a new batch of names. So like I have no idea what the hot, day trades are going to be tomorrow because every day it's new names, new tickers, new names. That's why you use the methodology and the patterns because the tickers might change, but the methodology and the patterns don't. But the idea behind the weekend watch list is kind of forward looking. And if there was one kind of multi-day hold in weed stocks, TLRY. Now, looking for entries, I know it's kind of the same thing. Morning panics, afternoon VWAP holds. That's kind of the two patterns we apply to these, higher float stocks. The one downside with TLRY is, 115 million in the float. So I'd be looking more for panics to support and or afternoon VWAP holds. So basically the way to approach TLRY every day this week, as long as the weed stays in the news, is if you don't get a morning panic, look for an afternoon VWAP hold. So yeah. And again, Simon, listen, I already said it. Okay. I already said my opinion on weed stocks. Okay. Like what Simon, maybe you got here late. About 20 minutes ago, I said, never get involved in a land war in Asia and never trust a weed stock. Okay. But the point is that it's the hot theme right now. Pretty much all the questions are revolving around weed stocks. And my point is that TLRY is like in my opinion, TLRY is like the least scammy of the weed stocks. Okay. Like, so understand that. I mean, that's my ringing endorsement of TLRY. It's the least scammy of all the weed stocks. Okay. Yeah, I think robotics plays still trending. iRobot's been a consistent winner. RR's been pretty solid. But iRobot, man, I'll tell you, those of you in the daily income trader system, I underestimate how many, like 3 straight days. I was like, oh, I just don't think iRobot's got the juice. I think I said that 3 times last week. Now, again, anyone that tells you they're always right in trading, run away. I was dead wrong on iRobot. I think 3 different days. I was like, man, I just don't think it has the juice. And it had juice. But, so yeah, robotics plays, definitely another theme to watch. We got a watch list in DIT as well. So, all right, guys, it's almost 8 o'clock. I'm going to run. Thank you, as always. Good discussion tonight. I got through most of the agenda, but this one was fun. I really enjoyed the back and forth. Yeah. So, all right, guys, have a great night, and we will see you next time.